Well, hello and welcome back to Stockbox here live from Resourcing Tomorrow in London. I'm joined now by Gervais Williams, of course, from Premier Miton. Good to be chatting to you again. Gervais, how are you doing?
Very well, thanks, Mark. And it's been this kind of unsettled year, really, hasn't it?
Yeah.
Markets have done beautifully, but a lot of the small caps, which kind of rose in the first half, drifted off. You know, it's not been a big year for small caps.
Yeah, it's the small caps. And when we obviously spoke at Aquis event not so long ago, and we were talking about how, I think you said some companies get literally too cheap to not to buy effectively, and you can only take a small position in a £1 million market cap company. And I've talked to a lot of people yesterday, and I've been sort of saying, trying to get their sense on how the markets have been, because from London's point of view, yes, it seems like it's been quite a tough year. I think generally for the markets, but particularly for the mining and resources space. Yeah, you're seeing companies struggling to get placings away or delaying IPOs. Some quite heavily discounted placings as well. Now, I've been doing investing for since probably 2013, so nearly over 10 years. And I would say this is probably the most discounted placings I've seen during that course. Now, you've been doing it a lot longer than me. What's your opinion on the state of the market, particularly relating to junior resources?
I think it's very tough. I wholly agree with you. Is it the very worst I've ever known? Probably, but I can't, I've known some bad times before, so this may be bad. But what I would say has been very interesting is the UK market has also been out of fashion. And so the UK is actually quite a big market for mining companies, especially junior mining companies. And so from that point of view, the UK being out of fashion, along with small caps being out of fashion, including the mega caps have done very well over recent years, has meant that actually, I think, has been starvation of capital. I think that point is absolutely there. And then when you take that, you kind of get ongoing kind of performance issues coming from the UK local investors. They've been actually redeeming their UK open-ended investment companies, OICs, every month for the last 41 months. And so there's capital being withdrawn from our clients. Therefore, we've not got new capital. Any new capital we give to companies has to come from selling out of other companies, and there aren't many buyers around.
Right.
And this is what's really driven, companies which have had disappointments have seen their share prices not just fall, but fall disproportionately. Those which have succeeded, share prices might have gone up, but hardly at all. And so the risk-reward ratio has been very, very tough for small mining companies.
So it's generally been, net outflows effectively. Do you see that changing anytime soon?
Well, we've been waiting for a change. Actually, the good news is just today, for the first time in 41 months, UK OIC flows have been positive. 317 million into the UK OIC market for the first time for 41 months, right?
Okay.
So, will it be down next month? It could be. Let's not get too excited. But it is a change of trend.
Yeah.
So the very important thing is there aren't many local sellers in the way that there were. So that's immediately important.
Yeah.
Secondly, there have been some international interests in the UK equities. So nearly everyone's involved in the US equities. Of course, it's all about the mega caps and the capital appreciation. It's all wonderful. But just at the margin, only at the margin, some international investors have started to say we need a bit more good and growing income. It's not just about capital appreciation. Want a bit on both sides. So actually, we've seen in the Bank of America survey for the last 3 months consecutively, rather than the UK being actually hopelessly out of fashion, not in fashion, but less out of fashion, possibly on moving up back into fashion. And so that means that international flows are also coming into the UK market, which is also, when you combine that with the OIC flows, that's very interesting. And then you overlay that with further bid activity. And we have seen some bids, cash bids coming in, opportunistic, not always at great prices, but the point is they've been coming in, bringing in new flow. So suddenly, actually, capital flow in the UK market could just turn quite quickly. Now, that's going to make a difference to mainstream companies, but it's going to make a big difference to the smaller companies, particularly companies like these, which were at the Mines exhibition today.
The exhibition today, And do you think that it's the companies here today, the junior resource space, or just the resource space in general, let's say, that have been really hammered in these last few years? The reason I ask that is because I keep a close eye on the bigger indices, the S&P 500, the NASDAQ, etc. Of course, you've got to keep a close eye on Bitcoin because that gives you quite a good, I think, risk-on, risk-off appetite.
So market liquidity type thing.
Yeah, exactly. And of course, Bitcoin's at all-time highs. You've got all the indices at all-time highs, particularly S&P 500 and NASDAQ. It's kind of constantly sort of making higher highs. So what's driving that? And money's not coming down to the lower end of the market, in your opinion?
Well, I think what the drivers up to now have been things like indexation. If you give money to index funds, they put the largest weightings in the largest holdings. Mega caps have been outperforming. So index funds have been outperforming actively managed strategies, which tend to have some big companies, but also some small companies. So that's led to the withdrawal of capital from active strategies like ours, not just ours, but very much across the market. So basically, you've seen withdrawal of capital from the bottom end of the market. along with extra capital going into big companies. And when you go into index funds, of course, the biggest company gets the biggest tranche. So that tends to... So you get this kind of virtuous spiral, which has driven the valuations of these things simply crazy. Now, don't get me wrong, they've had some good earnings growth and some news flows being good, but the valuations have moved from being kind of forward-looking to being really in many cases very forward-looking, and expecting that the positive trend to keep going. Now, it will do at times. It won't be just continuous, but most particularly, you're betting against history. If you look at any stock market data historically, you get what's called the small company effect, which means the smaller the market cap on average, the better the performance. And so that's fine. For the last 6 or 7 years, we've had this massive trend. US small companies, say the Russell 2000, has underperformed since 2016. Incredible, right? So we've got this kind of elastic band, which is very stretched. And what's been interesting, really, only in the last sort of 4 or 5 months, since about the 10th of September, we've seen actually the mainstream market sort of begin to change. S&P's continued to perform, but most particularly the kind of mega caps have started to underperform since about 10th of September. 10th of July, not 10th of September, 10th of July. And on top of that, the bottom end, the Russell 2000, for the first time, has actually started to show some outperformance since the 10th of July. So, okay, it's only a few months. It may not last. Things can change. If Trump's going to arrive, there'll be events. So coming back to that, it may not continue, but it's very interesting to see this elastic band, which is extraordinarily stretched, beginning to start driving some slightly different performance trends.
Now, I know at Premier Miton you're a buyer in the markets at this time, at the lower end of the market. We've talked about some stocks before. We might talk about some in a bit. But when you look at those bigger indices and you look at the mega caps, let's say, for example, Nvidia, for example, right? I mean, that's gone absolutely crazy. The chart's just like this over years and years and years, and it's just like, it's literally blowing off top. Should we be a little bit concerned of a more global kind of pullback? I mean, at the minute, I don't get this. You kind of get the sense that people are thinking, "Oh, it might happen," but you're not getting the sort of sense. Generally, crashes don't happen when people think like that. It's normally, it's normally when people are right, buy more, buy more, buy more. So I don't get the sense of buy more, buy more, buy more. I get more of the sense of this is going to crash, which kind of suggests it won't. So, do you have an opinion on a more global scale? Are we due a bit of a correction or pullback, or it's always hard to make these predictions on it?
I mean, correction is only 10%, so quite possible, right? Even a big pullback, more quite possible. Stock market crash, obviously possible, but very rare. And a bit, you just don't see them coming. The blue sky's out there. You think you're safe as houses, and then something happens. An event, maybe some kind of pattern which has already started, kind of changes fast, and then investors all gather together and they all try and hurtle out of the same things simultaneously. Of course, with 2020, it was a global pandemic. Who saw that coming? So coming back to it, just because markets are high and we don't see a crash coming doesn't mean there isn't one coming. But generally, they don't happen very often. So you shouldn't just keep worrying about that.
You don't base your decisions trying to work out when that's going to happen. You just have to look at the valuations in front of you, and that's what you're doing at Premier Miton. Looking at the commodities and the resource stocks that you're considering are undervalued, effectively.
Yes, I mean the great advantage of commodity stocks is they're just less correlated with the mainstream economy. Don't get me wrong. Poor economy globally would mean some resource stocks come down, but on the other hand, there's always one or two where, for whatever reason, there's special circumstances. There's a particular shortage in one, there's an absence of investment for 10 or 20 years in another, and you just get these spikes. I think what's been interesting really is about the change in political change. So the last 30 years is all really about globalization, being nice to your neighbor, getting more and more international agreements. Clearly what we've seen really in the last 10 years, since Brexit, since the first election of Trump, was actually more nationalism. And now we're seeing with the re-election of Trump, protectionism. Now that's 100% different from globalization. So coming back to it, we are just beginning now to see the risk that countries fall out with each other. We are seeing more global hotspots, of course, conflict, but most particularly we're going to start seeing perhaps cartels returning. There used to be a tin cartel in the past. Some metals may have cartels going forward. So you could suddenly find that actually the global economy is not doing much, market's not doing much, but actually what you are seeing is suddenly the older commodity doesn't just do well, it does super well. And so the opportunity for some of these companies, not just to make money, not just to succeed, but actually just be in the right place at the right time and luck out large is dramatic.
Where do you think we are on that kind of, are you starting to see the shoots of that time coming when the cartels might start coming back in these commodities, and obviously it's a very cyclical sector. We know it kind of goes big as a boom and bust effectively, mining cycles. Do you think we're starting to see the green shoots coming out of the bottom after going into quite a
I suppose the interesting thing about the last couple of years is global growth has persisted. Most of us would have thought that with interest rates being elevated, there would have been a recession. There hasn't been.
Yeah.
So that's kind of good news. But actually, when you look around the world, Chinese growth is very patchy. European growth is also very patchy. UK growth, not up to much. US growth, yes, there, but not that vibrant at the moment. So actually global growth isn't that strong. Coming back to it, a lot of these commodities, their prices are low at the moment. They've peaked out. And so the opportunity for global growth to accelerate would certainly be a surprise on the upside. But if cartels happen, of course, that would really smash UK global growth, but it would actually lead to individual metals companies doing extremely well.
Okay. In terms of commodities then, that might sort of outperform, you mentioned tin, so I guess you're a buyer of sort of tin projects, tin companies. The other 5 hours picking up and talking to people, copper, gold, very popular. Bauxite, which was a new one on me.
Yes, aluminium. Yeah,
it's something I'm going to have to research because I've heard the word, but I'm not entirely sure its industrial use. But bauxite, that was a new one on me. Nickel, this is sort of out of Australia. And copper, of course, as well. And I think Barrick are here, and they're really heavy on copper.
Yeah.
So would you sort of agree? Oh, uranium as well, of course. That was a talk last year when we were here, and it sort of stayed pretty much where it peaked, it went up to last year. And I was talking to someone from Nuclear Europe just earlier, and they can only see that sort of demand staying where it is effectively as we move down to a nuclear-powered energy in the economies. So any other commodities that you would think might be the ones to kind of keep an eye on?
Well, I think they're all interesting. From the point of view of nuclear, what we've seen just today is actually Centrica have announced that actually they're going to extend the life of some of their UK reactors. Right. 1 year for 2 of them and 2 years for 2 others. Yeah. So that's just immediate extra demand, which wasn't expected, 2 weeks ago. So coming back to that again, we're going to see these kind of announcements coming through all the time. Okay. And alongside that, we've seen with gold. What's interesting about gold isn't so much that the gold price has gone up, but it's gone up really an awfully long way. 2 years ago it was 1,600, now it's 2,800. So coming back, massive moves. You don't underestimate when these commodities move; they can move a long way. Why is it moving? Particularly Eastern European banks. They don't want so much in terms of fiat currency. They actually want to put their reserves into gold. And they're actually buying more and more gold. Now, of course, the Chinese are doing the same and the Indians are doing the same. So there's renewed demand there. So again, as we get globalization kind of fading, where confidence in fiat money becomes less certain, then you find that actually physical commodities start to improve. And particularly there's inflation. Inflation 2022 was a big story. It's peaked out now. Is it going to get into deflation or are we going to go into inflation again? Don't know. But actually, some individual commodities will do extremely well. And coming back to things like copper and all that kind of stuff, of course, there's a huge demand potentially for electric vehicles and the electrification of the global economy.
Is that what's driving the price of gold then, fear of fiat currencies? Or is it the Eastern governments trying to shore up to do a BRICS currency, for example?
I think it's driven by 2 things. I think individuals actually want to diversification away from paper assets.
Individuals.
So that's particularly true in emerging markets.
Okay.
So as I say, Indian, Chinese individuals, others as well.
They want to feel they've got some wealth in their pocket they can hold.
And certainly in an unsettled world, if you're in a country where for whatever reason you're unsettled, you may feel worried about the long-term stability of that country. The great advantage of gold is you pop it in your pocket and you cross border. So you can actually move with your wealth, and that's why gold's always been popular. Bitcoin will have a potential for there as well. But coming back to the key question, which is that global central banks are now starting to actually rebuild gold reserves in a way they hadn't been doing for the last few years, and I think that's been the real drive of the gold price in the last 2 years.
Why are they doing it?
Diversification.
Okay.
So they say, if things get nasty, we don't know. If you take, the Russian invasion of Ukraine, one of the features of that was actually that a lot of their fiat currency was suspended, and all of those reserves are not available to the central banks. Okay. So if you happen to be in a country where, for whatever reason, the Americans might feel badly about you, you're at risk of finding that some of your reserves are suspended.
Okay, right. What do you think about the gold price? Do you think it's going to pull back a little bit? And then
bound to. It's had such a good run.
It's got to come back and do a little back. Yeah.
Normally when you get a strong dollar, we've had a recent strong dollar. Probably Trump is more strong dollar, I guess. I don't know. Then that's obviously going to start weighing on the gold price. But ultimately, it's a physical asset. Are we going to get deflation or inflation? I don't know. But I think some countries, unfortunately, are going to suffer deflation. But I think there will be potential for the gold price still to carry on.
Okay. Lithium, do you have an opinion on lithium? I know that was a hot commodity a few years ago, but it's struggling at the minute, isn't it, at the moment?
Yeah, lithium, I mean, it's obviously essential to the electric vehicle market, particularly. Electric vehicle demand has been much less buoyant than we originally thought. The subsidies have dropped away. There's been some anxiety about range of some of the electric vehicles, so that's really held it back. So we have seen lithium price probably quarter actually from where it was a few years ago. So it's come down an awfully long way. Of course, it's already down now. Now we're seeing that demand is going to be there. There are going to be more electric cars next year and the year after. Okay. So actually, you are probably going to see a recovery in due course.
Right. Okay. Can we talk a little bit about some of the sort of key stocks you hold? Our audience is private investors. Yeah. So they always like to hear from fund managers or other experts on what they're sort of holding or looking at. I know we talked about Nostra Terra after the Aquis event, and then a week or two later, I think they raised, didn't they?
They did.
Premier Mike
took
part again.
Yeah.
I interviewed Paul Welch after that and said, "Another discounted placing, Paul. You're really upsetting retail investors here." And he said, "This is the last one."
Yeah.
Now, I'll hold him to that if he can do it. But he said, this is the last discounted placing. We've now proven our model. We've got into cash flow. And now what we've got is we can keep building on that cash flow and reinvest it. You obviously felt confident because you took part in that placing. You think you've got 12% now of the company, roughly?
But it is the tiniest company. I mean, what's interesting about that is it's the kind of company which most institutions wouldn't even think about. They just can't get enough capital in. When you're a £2 million company, even if we've got 10% or 12%, we've only got £200,000 or £300,000 worth in obviously a portfolio which is relatively large. So
sure.
But people say, well, why'd you bother? The great advantage of some very tiny companies is sometimes they can succeed, and when they do succeed, their share price might go up 5 times or more, right? Yeah. So coming back to it, that's why we're involved. Coming back to it, yes, I mean, we've got quite a lot of mainstream companies, so things like Pan African Resources, of course, it's a gold company, South African business, very strong business. Clearly with the gold price going up, the profit's gone up a long way, a long way. The share price has done extremely well, actually, which is very pleasing. It pays a good dividend. We like that.
Okay.
And ultimately, although its share price has gone up, of course, because its earnings have gone up so fast, actually its earnings valuation is still very measly, as are many of the commodity companies like Rio's and all the rest of it.
Okay. Any of the small caps that you're holding that sort of caught your interest recently?
Well, there's always companies coming through. So one which has been interesting, they've just raised money again, is Kefi, which is
they're here, I think.
So it's an Ethiopian company. It's bringing got a new gold mine into production in Ethiopia, which is major development for that a global serious scale. But also it's got an awful lot of assets in Saudi Arabia. It was very early into the Saudi area. It's explored. It's got 5 potential prospects. So it's not just got a new mine coming into production. It's got a number of new prospects as well. Again, really very commercially driven. We love companies which are very careful about spending money, but actually still keep the eye on the prize, which is very much that we're here to make not just a return, but obviously a multiple on the original investment.
I know Kefi's got quite a good following. Greatland Gold, I know we spoke about that before. You told me you think they've had the last paycheck and they'll get into cash flow. Any of the ones you can think of that come to mind?
Well, I mean, there's Andrada, which is again the tin one you mentioned. So that's in Namibia. Again, it's a small country. It's a very small population actually in Namibia. But I mean, again, I think there aren't that many global new mines coming on in tin. Tin is very much involved in all electronics, as you know. All the solder's made out of tin. So actually, there's been very little production coming on, and here's a company where actually the tin price hasn't moved that much, but we think it could move into due course.
Tin's doing well, isn't it? And I know I mentioned Rome Resources to you earlier.
Yes,
you said you were aware of Rome Resources, but because of the jurisdiction of the DRC, it wasn't sort of the mix of risk for your clients. Are you familiar with the Alphamin project though that's next door to it? Because I think they're trying to effectively.
I had a look at it. I haven't met the company, but I had a look at it when I saw Rome. I thought I'd just take a look at that. So I mean, clearly there's just Africa generally has got not just attractive resources, but often very close to surface, very little cost in terms of clearance to actually get into production. So from that point of view, I think Africa as a source of minerals is really very exciting.
I was going to ask that as a final question. Where do you think the hot jurisdictions will be? Because I've got the sense now for quite a few months that Africa's got such a wonderful future in this space. But of course, Africa perhaps struggles a little bit more on the political side, perhaps not as stable as Western governments. But do you think any particular jurisdiction will be one to keep an eye on?
Yeah, I mean, what's interesting about Africa is unfortunately most of the countries have a trade deficit. In other words, they're vulnerable if there's a hard currency shortage. I think Trump will equal a hard currency shortage. So I think we're in a completely different game here. And I think, unfortunately, quite a few African countries will really struggle to have enough resource. We saw that with Egypt recently. Basically, quite a lot of them are going to have currency problems. So actually, we've been really quite cautious about which African countries we've gone into. Not because we don't think the leaders are great. Some of them are really very robust, but some of them are going to run out of hard currency. Now, therefore, you look for countries which actually have a trade surplus. South Africa has a trade surplus. And so that's why we're more comfortable investing in South Africa than most of the other African countries.
Okay, excellent. Are you going to be heading to the Indaba?
I'm not. Actually, I've never been to Indaba. I don't travel much. My own personal carbon footprint is quite low. It's been that for the last 30 years. Maybe I'm right or wrong, but I've always kept my carbon footprint low.
Okay, good. Well, thank you very much. We had a nice little chat there. Thank you very much for doing that. I know you've got a busy day, but that's Gervais Williams here on Stockbox from Resourcing Tomorrow here in London. Thank you very much for your time, Gervais.
Thank you.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programmes at stockboxmedia.com. Thank you for watching.